If you are trying to help your aging parent try to figure out how to pay for their long-term care needs, you just might be feeling overwhelmed by the maze of options and information out there. But you don't have to go it alone because I am here to help. Today, we're going to look at some creative options for paying for long-term needs for your aging parents. Hi there, I'm Sophia. I make weekly videos to help you support your aging parents with the best information, resources, and mindset strategies so you can have a peaceful and purposeful parent care experience because I want the very best outcomes for both of you. Today, we are going to walk through some creative strategies to pay for long-term care. Whether your parent needs in-home support, assisted living, or nursing home level of care, we are covering everything from using their home to find funds to leveraging government programs and exploring some lesser-known financial tools. So let's get going. I am going to start with things that you could consider if your parent owns their own home. And for everything I talk about in this video, I'll go ahead and put a link in the description box below so you can get more information on all of these resources. So the first thing is renting out a room. A very simple option is renting out a room, a spare bedroom in your parents' home. It can provide steady income, especially if the house is larger than what they need. And if your parent doesn't have a spare room to rent out, you could even consider renting out a room in your own home and using that money to help support your parents. Some people even offer room and board in exchange for caregiving help. Imagine a student or a caregiver who lives rent-free in return for helping with meal prep or errands or light housekeeping. It can really be a win-win situation. Your parent could rent out their entire home. If they want to move into an assisted living or a care facility, consider renting out the entire house. This could generate enough monthly income to offset the cost of care. Renting can also be a way to maintain home ownership while you're figuring out what the long-term plan is going to be. These options of renting out your home would require your parent to pay taxes, so make sure you talk to a tax expert to make sure they're following all the rules. Next, a reverse mortgage is for homeowners who are age 62 and older. A reverse mortgage allows them to convert their home equity into cash without having any monthly repayments like a HELOC. The loan is repaid when the home is sold down the road or when the owner passes away. It can really be a lifeline, but it's important to consider how it would impact the heirs or the beneficiaries because they're going to need to repay the loan or sell the house to settle the debt. Next, homeowner agreements by companies like Unison or Unlock. They allow homeowners to tap into the home equity without taking out a loan. Instead, these companies invest in a percentage of the home's future value. So while these agreements can provide immediate cash, they reduce the inheritance value of the home, so read the terms carefully. Next, your parent could sell their home to downsize if maintaining their home is too expensive or it's too big and overwhelming. Selling and downsizing can free up a significant amount of funds. Downsizing into a smaller home, a condo, or an assisted living facility or a senior community can really stretch the proceeds of the sale and provide more manageable living arrangements. This strategy also opens up the possibility of exploring alternative living situations like moving in with family or into a more affordable senior living option. The rest of these ideas coming up don't necessarily require home ownership. So if your parent has assets, they are going to want to protect them and preserve their assets while qualifying for Medicaid. A trust account might just be the solution. I once worked with a patient who became disabled after an accident, and and he received a multi-million-dollar settlement. But by placing his funds in a special type of trust, he was still able to qualify for long-term care Medicaid, and their children still benefited from the settlement proceeds. Trusts do require careful professional planning, so always consult with an elder law attorney. Next, the VA's Aid and Attendant program for veterans or their surviving spouses can be a real game changer. This program provides monthly payments that can be used for your parents' personal care or in-home assistance or even an assisted living facility. It is an excellent resource, but the application process can take time. So check early and also check out my other videos about the process. Next, viatical settlements. If your parent has a life insurance policy and meets certain criteria, typically that they have a terminal illness, they may be able to sell the policy for a viatical settlement. This provides cash upfront, often much more than the policy's surrender value. So even if your parent isn't terminally ill, some policies offer a life benefit option, allowing them to sell the policy for immediate funds. Always check with the insurer for specifics. Some life insurance policies include an accelerated death benefit rider. This allows policyholders to access a portion of the death benefit early, often for critical or chronic illnesses. But there is a catch. Insurers, they don't always highlight that this option is available, so you might need to call to ask if your parent's policy includes this. Long-term care insurance. If your parent has a long-term care insurance policy, it could cover a whole range of services that you might not consider. Anywhere from providing money for an in-home caregiver to an assisted living facility, adult daycare, or a nursing home. It's worth reviewing the policy and checking out with the provider to make sure you understand what's covered and what's not. If none of these options work for your parent, then your parent can spend down their assets that they might have to qualify for Medicaid. Medicaid doesn't count their home that they live in as an asset in most cases, and once they qualify, Medicaid could cover in-home care, assisted living, waivers, and of course, nursing home care. Just remember that many of the programs I mentioned in this video, like reverse mortgages or renting out the home, might affect their eligibility for Medicaid. So it's important that you plan carefully and consult with an elder law attorney or Medicaid planner. Your parents could also consider selling assets. If they have a car that they can't drive any longer, consider selling it to help fund care. Other assets that they may have, like jewelry or antiques or collectibles, like Disney memorabilia or baseball card collection, can really be worth a lot of money these days and can be sold to generate extra cash. These small steps, they can add up. Pooling resources as a family can also be a powerful way to bridge that financial gap. In my own family, we all contributed to help my dad pay for assisted living while we were waiting for his VA's Aid and Attendant benefit to be approved. It was a team effort, but it made all the difference for him. No matter what combination of strategies you're considering, consulting an elder law attorney or estate planner is a must. They can help navigate the complex rules and laws and protect your parents' assets and ensure that you're making the best decisions for your parents' care. I know that was a lot to take in, but I hope it gives you a roadmap to start exploring different options and being flexible. Every family situation is different, so take your time, ask questions, and find the solution that works best for you and your parent. If you found this video helpful, please go ahead and give it a thumbs up and share it with others who might need this important information. And please share in the comments if you've found other creative ways to pay for your parents' care, because we'd all love to hear about it. I thank you so much for watching. I'll see you next time.